Morning.
Right, so welcome to Accountable's August education session. So we do this every month with a different topic. So this month we've got the lovely Sarah Burgess from Little Black Books coming to share her knowledge. She's a management accountant, but I'm going to tell you more about her shortly. So today we're talking about taking charge of your cash flow. So a little bit about us. So Accountable, we are Gold Zero partners. We're also agents of Attains, so the Accountants and Tax Agents Institute of New Zealand, and we're also certified, silver certified members with the Institute of Certified New Zealand Bookkeepers. I don't know why these people have such long names. So, and this year we were crowned the 2020 winner of the Certified Bookkeeper of the Year award. So that was actually really quite exciting. And I couldn't do it without my team. So a little bit about us. Yes, we do the financial accounting. That's that boring stuff that IRD says you must do. We do the bookkeeping for those business owners that really don't have the time or the will to do it. And Sarah, you pretty much do that in the South Island, don't you?
I do, based in Canterbury, yep.
Yep. And then our special niche is we work with companies in financial difficulty. So we will help you get through the troublesome waters when business is not actually doing that great. And we are also business development coaches. So we can actually help you with business planning and actually steer you in the right direction. So today, there's a few of you on the line, and then we are expecting quite a few more. So feel free, down the bottom you'll see that there's a chat function on your screen. You can actually send us messages, and I'll interrupt Sarah and we'll get those asked. Or do you want questions at the end, Sarah, or during? What floats your boat?
Probably at the during maybe.
Okay, so yeah. Feel free. If you've got something to say, make sure you say it, because I can guarantee you if you're thinking it, someone else here is also thinking it, they're just not as brave to say it. And so this is where I get, and she was so lucky, I have been searching for a photo of Sarah and she didn't actually have one on her website. So that's
I know, that's really bad.
Smacking of the hand, Sarah. And so then I was actually on her Facebook and I had found so many awesome photos, and they were about to make it to the screen off your Facebook page. And then she sent me this one. So this is Sarah. So she's a management accountant. So she actually works with business owners, actually helping you day to day. So whereas a financial accountant will actually do your end of year books and tell you about your profit and loss, Sarah is actually in there holding your hand, helping you understand your gross margins and all those other accounting terms. So she juggles being a mum to 3 small humans, as well as being a trusted advisor to many small business owners. She truly appreciates the importance of a healthy work-life balance, and one of the photos was actually her up in the hills going for a walk in her sports gear. So I thought she'd love me to put that up here. And she shares my passion for educating small business owners so that they're empowered to make really good quality business decisions. So thanks for doing this with me, Sarah. I really, really appreciate it. If you now want to share your screen,
okay,
we can kick it off.
All right, here we go. We'll do that one. Thank you for that lovely introduction there, Hayley. Can you guys see that? Oops.
Yep, we're at the end already. That was quick.
We're at the end. Hang on a second. So we've got a bit to get through, as you can see. There we go. Lovely introduction. Thank you, Hayley. Right.
You're welcome. Next time, put a photo on your website.
Yeah, I know. I need to do that. Do you have any good photographers that are down here? Okay, so yes, this is what we're going to be talking about, is taking control of your cash flow. So let's get started. So as Hayley mentioned, yeah, I'm from Little Black Books. My name's Sarah, and I'm all about building profitable and predictable businesses. And it's quite timely having this webinar now, because cash has been coming up with a lot of clients and the conversations over the past couple of months, because we've seen obviously an interesting bump with businesses, and it's been a very stressful, crazy time. The reality is we don't really know what the next 6 months will look like. So this is where forecasting can come in and really help you out here. If I just talk about the inherent risks that we take as small business owners and entrepreneurs as well. So if you think about it, in a good economy, there's always risks involved, right? And now there's even more higher risks with this economic, downturn that's happening, and this whole other new level. So this session is about challenging you to become much more aware of the cash flow cycles in your business, with the intention to help you plan and understand what your numbers are telling you. All right, so if we get started, I don't know if you've seen this all-bed model before. Has anyone seen this one before? No? Oh, Hayley has. There we go.
Yeah, I think Hayley did it for us.
Yeah,
Yes,
that's right.
we've done
I'm
it.
a big...
Yeah.
Yep, definitely. So you guys are a bit familiar with it then. And I've brought this into my business as well. And I think it's really, really important to have this type of behavior, and the words you speak as well, bringing that board into your business. And I'm actually trying to bring that in with my kids too. I want to give them more ownership, more responsibility, tell them to less blame and less excuses on things. And we can bring this into our business. So you can be the victor, take ownership over your cash, take responsibility over it, or you can just make excuses, deny yourself of it, and blame someone else about it, or to have those type of behaviors. So we want you to be above the line, being a victor and taking control of it. And this is what obviously this is going to be all about today. So the agenda. My goal is to help you get some cash saved up in the business, so that you have the flexibility to react to whatever happens in the future. So I want you to walk away feeling an improved confidence and motivation to be able to do this. You might have blinding flashes of obvious, so you've heard this before, and it might just really sink in today. I want you to have a clearer distinction on material you've already seen, and clarity about the most important things you need to focus on in your business. So we're all different here, we're all at different stages, we're all running different businesses. Find out through this webinar what's most important to you and follow through with that. Your face is down here. There we go. I'll move that there. All right. So what we're going to go through today is the 5 principles of keeping cash flowing. We're going to look at the difference between profit and cash. So I'm going to help you understand that difference, because reading your monthly P&L and seeing your bottom line profit is one thing, but understanding why you don't have that profit sitting in your bank account is quite another. So cash and profit are very different. We're going to look at the 7 key causes of poor cash flow. And then together we might brainstorm on ways that we can improve these business processes. So if you're a new startup business, or you're quite new to this and looking at all your business processes, this is going to really help you and understand your cash conversion cycle. And that's the time where you bill your client to when the cash comes into your bank account. And then we're going to go through my favorite thing, which is cash flow forecasting. I'm going to tell you why it's all really important, and then I'm going to go through a template with you. And don't be scared, it's not scary, even if you're not a numbers person, that I hear a lot. What we're doing is just throwing some figures in a spreadsheet, and it doesn't have to be complicated. So even service-based businesses like me, I do this exercise because it gives me an understanding of what happens if I lose clients. What happens to my team? How do I manage that and keep the business going at break even during these uncertain times? So these are the questions we need to be asking ourselves so that we're prepared for them. And, we're not flying by the seat of our pants month to month, hoping that everything works out for the best. We've got control over it. So, and then after that, it sort of flows right into a cash flow management, and that'll be personal to you. and in terms of what you want to achieve out of your business. So I promise to keep the session straightforward, to the point, no fluff. I've got about an hour, so I'll try and burn through it all. You'll get a recording so you can play back anyway. And yeah, so that said, let's build a profitable, predictable business. And yeah, let's go for it.
Just before we start, Sarah, for you guys who are established businesses, I know some of you are new, do you want to just chuck it in the little chat thing? How many of you actually look at your profit and loss each month? Let's actually see who's actually tracking their performance, because I know a lot of us, including me occasionally, actually stops looking at the numbers. Cool. Carry on.
You can tell us that poll shortly.
Will do.
Okay, so these are the 5 principles that we need to remember when we're running our business. So without cash, your business will not survive. Cash is the lifeblood of any business, and you cannot have a thriving business without cash. So in fact, very profitable businesses can and do fail because of poor cash flow. And having the cash enables you to grow into a successful business. So yeah, you have to manage the cash well. You need to understand your key cash flow drivers. So again, these are the business processes that affect your cash flow. That's why the 7 poor causes of cash flow, which we're going to be covering soon, are quite important. So I hope you've all got a pen and paper. Write down some notes, because you might get some good tips and tricks. Next, we're going to go 5 principles. Managing cash flow is all about your business processes. So just what I said here, it's processes like how you order stock and pay for it, how you bill your suppliers, how often, making sure you get paid by your customers. And then obviously treating the symptoms of poor cash flow without fixing the underlying causes. Now, this is time consuming and frustrating. And you need to be prepared to make changes. So it's all very well and good turning up to this webinar and going, yep, okay, cool, but you need to be prepared to take action and make these changes in your business. And by making these changes, you will build a much better, more profitable, predictable business, as well as improve your cash flow. All right, so profit and cash. How are we sitting with profit and cash, guys? Do we know the difference between profit and cash? Most of us? Yep, I'm getting a few nods. That's great. Excellent. So 99% of the time when a client does contact me, just going up to reading your financial statements, like what Hayley mentioned before, they don't particularly understand them though, and it's not surprising. So one thing some business owners, especially when they begin, when they start out, they often struggle with understanding this difference between profit and cash. So they might have high profits, but wonder why they don't have the cash to show for it. So profit is the money left over once the expenses are paid. So with your profit and loss, you've got the sales, less expenses, and then that's your profit. Cash is your bank account, basically cash going in, cash coming out. It's that fluid movement. If we look at this slide, it might give you a better understanding in terms, you guys can see yourself over there, can't you? Here we go. That's probably better. It might give you a better understanding of the difference between the profit and cash as well. So if we look at GST, that's not built into your profit and loss, because your profit and loss is excluding GST, but it's built into your cash. All right, so loan repayments. The reason why there might be a difference between profit and cash is that you've got loan repayments to take care of. So that's not going to turn up in your profit and loss statement. That's going to go through your bank account because it's paying a liability. So that's cash. Interest on loans, that's an expense. So, you know, remember your sales, expenses, profit, interest is an expense. So that's going to turn up and it's going to go through your bank account too. So that's cash. Cash spent on assets. So there was a question before about what to do with some cash that you might be getting. Now, if you spend that on an asset, that's not going to come through in your profit and loss statement. That is going to be capitalized on your balance sheet. So that's going to affect your cash flow. That's not going to go on your profit. And then your cash received from the sale of assets, same thing. And then depreciation is an expense, goes through your profit and loss. So that's going to affect your profit. That's not going to affect your cash. Do we have any questions on this?
I think the biggest distinction too is that your profit is what you pay tax on. It is
Yes.
not necessarily the money that you have. So you may have actually had lots of loan repayments to make. Your bank account may be sitting at zero, but you've still got a 10 grand tax bill to pay. And that's because a lot of these things are not treated as an expense through the business. So have
Exactly,
any of
like
you,
drawings as well.
oh yeah, drawings. And I think the profit at the end of the day is actually where your drawings come from. And I quite often see in my role, don't know about you, Sarah, that people have gone, oh, I'm just going to take my $1,000 in drawings and then I'm going to go down the road to the supermarket and pay for that with the business bank account. And suddenly their drawings are $50,000 and they've only actually got $30,000 in profit.
Absolutely. Yeah. And it's quite important to have a look at your drawings on a regular basis just to ensure you're not doing that and you are aware of how much you are drawing from the business.
Yes.
Yeah. We will discuss drawings shortly with the forecasting as well, which is quite cool.
So does everyone fully understand the difference between, you know, the profit is what you're going to pay tax on, and but that has nothing to do with your cash flow. So today we're talking about cash flow and actually making it flow. We don't want a bunged up tap. We want it to actually be giving us quite a bit. Yeah, right. Let's carry on.
Okay, so there's 7 causes of poor cash flow. So these are all your accounts, your business processes, or a lot of these ones up here are up at the top. We're going to go through these individually. So this is where I want maybe some brainstorming from you guys too. So pop some answers in the chat box if you like, or unmute and we can have a chat. So poor causes of cash flow can turn up in your accounts receivable processes. They can turn up in your accounts payable processes, your inventory processes, so carrying stock for too long, your debt and capital structure. So we're going to have a little chat about that. Overheads. Now, this is where you do need to do a thorough review annually, at least. And then your gross profit margins and your sales levels. So poor cash flow can happen around these as well. So we'll go through these individually now, have a little chat about them. So these accounts receivable processes. So without knowing what type of businesses you run, this will be quite broad across all industry and businesses. So you'll definitely will pick up something. So this results in debtor days being too high. So what debtor days are, if you've heard that term before, or haven't heard that term before rather, is the timing between you billing a client and the timing where you receive that cash into your bank account. Okay, so that can go out 10 days, 20 days, 50 days. Obviously, we want that as short as possible to get your cash flow, cash conversion cycle going. Now, for me, for instance, I invoice on the 31st, so I'd invoice out on the 31st of August, and I've got a 10th of the following month payment terms. So I've got 10 days, basically. Other people have 20th of the following month. So that's 20 days before you receive that cash. And if they don't pay on that 20th, and they pay on the 30th, that's stretching out your cash flow another 10 days. All right, so we want it in the bank account as soon as possible. So what can we do to get your money in your bank account quicker? How can we improve the cash flow in that? So some things that we can do is discount for prompt payment. So you'll find that with power companies, they give you early discount prompts and you end up paying a bit earlier and you get that discount. So you could start offering that to clients depending on the business that you're doing it. What Xero has done as well, which is quite good, is they do stripes. So they do a pay now button on their invoices. You can incorporate that into your accounting system if that's what you're using. And that has been proven that invoices are paid on time or earlier. So it's a really good strategy to use, and that's under Stripe. Alternatively,
A couple of people here, Sarah, have actually said ask for a deposit and then balance on collection of order. So that's
yes,
also a good idea.
Yep. deposits are great, especially for those big jobs. Brilliant. Yeah, absolutely. And
Or
the last one I was going to say.
Get paid before providing the service as well. That's another one that's come through.
I like that one.
Yeah, I do too. Let's all just go with that model, shall we?
Yeah, let's do that. There's also, if you're a service-based business too, you can use Go Cardless. So that's setting up your clients on a direct debit every month, so you don't actually have to worry about it too much as well. So some people set themselves up like that too. Yeah, no, those are great. Okay, so the accounts payable process. So that's obviously you paying your suppliers. You know, what can we do to improve this process? So what I have come across when people have, you know, in my line of work is they don't have a proper process in place. So what they're doing is they're paying invoices twice without realizing it. They're not making payment, they're losing their invoices. So it's about streamlining the accounts payable process in your business as well. So you're not doing these things and stressing yourself out about it. So yeah, those sorts of things as well. What do you guys do in your processes? There's also a good one here, is having spending budgets in place. So I don't know if there's any bricks and mortar type businesses owners here with stock. So there's a risk with that type of business that you hold too much stock, that you keep on buying because you get quite excited about the stock, which leads in nicely to the invoicing process, which is next. You could always put a spending budget in place for that. I know a few businesses that tend to get quite excited about new stock, and when suppliers come and it's important to have a bit of a spending budget on that too, because you can sort of overspend as well.
Especially with that one-time deal that a lot of suppliers often do. So we've got, Jan's actually set up all of your automatic payments, so they're all done.
Great.
Some suppliers are prepay before shipping, others are 20th after the end of the month, so that's pretty much a standard thing for New Zealand. I don't know where the 20th after the month thing came from, but it's what it is.
It's interesting. I found people moving away from that too to improve cash flow. They're just going, no, not 20th, moving it earlier.
I totally agree. I think that's something that we actually do need to recognise. There is no law that says your bills have to be paid on the 20th after the month. You can actually make it 7 days, 2 days, whatever you want. It's about what's best for your business. And Linda says when a bill is invoiced, she goes straight to her bank account and she pays it when it's due. And pay it when it's due. No, earlier. Oh, so when a bill is invoiced, she goes straight into the bank account. She sets it up ready to go out on the payment date, and then she deletes the email so that she doesn't double pay that bill, which is also what I see a lot of people paying things twice. And keeps statements in a folder together as they come in. So she grabs those on the 19th and pay them. Just really good thing here, Ange, and I just want to get this out there from a bookkeeping perspective. I've come across many business owners through the years where they've actually kept all of their statements, and because all of their invoice numbers and everything are actually on the statement, they throw away the invoices. They don't keep the invoices. The invoices are the correct documents that you actually need to keep. That is what you need for all of your records. The statement is just a collection of all of those things. Make sure that you check them off. And I have actually seen in the past where invoices have been sent out for say $1,000, on the statement they're $1,200, and then people go and pay the statement. So really keep an eye on your invoices. If you've got the statements, check them off and make sure that those invoices are correct. You don't want to be paying your cash flow out to someone else.
100%. And like what was mentioned earlier, don't pay them any earlier either. Pay them when they're due.
Yes.
Helps with cash flow.
Yes.
Okay. That was really cool. And then, as we sort of touched on just before, the inventory process. So are you carrying stock for too long? So you could have heavy stock, like full shelves, but an empty bank account. And also if you're in the hospitality industry, you've got to watch out for wastage as well. So if you're over ordering and food's going off, that can become quite a problem because money's just literally going in the bin. So ways we can shorten that cycle and keep that stock moving faster. Technology is a really great way to manage stock. So if you haven't got that in yet, try and get a good system that will help you, you know, with your stock reordering levels and push slow moving stock. And just your stock control process. So document and communicate to the team. Make sure you're all on the same page and review stock ordering systems. I'm not too sure how many sort of businesses we have like that on here, or if you're online businesses. So it'd be great if you could share yours if you are.
I think one of the key things I've seen from my experience is that stock is either not actually checked in to make sure that what the invoice is being received is actually the stock that we're receiving. Celine has done a great thing by not actually having real stock. She's selling online programs, so well done. There's also the fact that things are actually put away, you get breakage, they're not stored correctly, and at the end of the year, and even I sort of say to clients, actually double check your inventory a couple of times during the year. Don't wait for the end of the year stock take for the financial accounts, because if something goes wrong in your business and the building burns down, what evidence have you got to give to your insurance provider to say this was how much stock I was holding at the time? So, and at the same time, it's actually a really worthwhile exercise to go through and actually look at it and know exactly what you've got at any point in time, and then look at how much you've actually sold and how much you've bought, and are you actually having stuff go walkies?
It's a really, really good point there, Hayley. Yeah. Now, overheads, which is something, oh, no, it's not. No, sorry, we're in debt and capital structure. Sorry about that. One step ahead. Now, this needs to be reviewed on a regular basis. Okay, so how can we improve our debt structure? So there's a few ways. Perhaps your debt could be consolidated and paid off on the longer term, if that would work for you. You'd need to sort of model that out a little bit. Have an honest conversation with yourself about your drawings from the business. So we touched on that earlier. I've had several clients come in and not realize how much they are drawing from the business, and that's why they keep going into overdraft. When you have a look at it on paper and total that figure up, it can be quite confronting, but it's something that needs to be addressed, and you need to look at why you're drawing so much and if your business can afford it as well.
Especially when you're spending the money at the supermarket, that's even worse. So
yeah. So have a look at that. And maybe your business actually does just need an injection of capital to fund its growth. So often significant cash flow and interest charge improvements can be achieved with regular review of existing debt. So I've had clients as well be high growth companies, and they were doing brilliant high profits but low cash because they were just experiencing such rapid growth. And what happened and what they needed was just an injection of cash flow, so an injection of capital. Once that happened, they caught up with themselves, and now they're going bananas. They're going great. So even though they were running out of cash, but their profits were high, it was actually a really great business, but they were just rapidly growing way too quickly, and they just couldn't keep up with it. They were lucky enough to have that capital injection, and they kept going. But yeah, it's definitely something to look at. If you can afford, obviously, paying that back, or however structured that is. But yeah, look at your terms of the loans that you've got. Look at your interest rates if you got that debt, and definitely like have an honest look at your drawings. That's what I would sort of say here.
And so if you are in a position where you're struggling a little bit at the moment, and you're COVID affected or something like that, there is the business finance scheme that you've actually got available running through the banks that is actually backed by the government. So it's 20% backed by the banks and 80% backed by the government. So that's also another option available But once again, you are getting a loan, so just really make sure you do your homework before you go and get more loans.
Yeah, definitely. So next we're just going to talk about overheads. This is what I love to review in businesses. Now that might sound really geeky, but it's actually really helpful process to do. Now a lot of people only do this annually. I think that's a bit risky, but I would probably do it, I do it monthly almost, depending how much time you've got, or at least every 6 months. Having a look at your expenses, a thorough review to see where reductions can be made is just priceless. You'll be freeing up yourself in cash in no time at all. So have a look at line by line item. You could look at your suppliers, say your IT suppliers. You know, why are you with them? What rates are they charging? Maybe get a few quotes around as well. Same goes with phones. So, you know, have a look at some plans around. Power, definitely power. So you hear about switching powers in our own homes. Have a look for your business as well and see if you can get better rates as well. And also reduced plans as well. So like, you know, when we talk about our telephones, do you need all that data? You know, do you need all of the whole big shebang package? Maybe you could break down little bits off of it. And just go down line by line item and see what works for you and where you can reduce costs. So it could be marketing as well. Are you getting that return? Or it could be bank fees, you know, it could be banks as well. Having a look at line by line item to see where you can free up some cash. Have you got anything to add with that one, Hayley?
I think subscriptions and that sort of stuff, that's a really big one. You don't want to end up with too much tech debt where you're just paying for too many subscriptions and you're not actually using them all. And the other priceless one that I've always found, when you actually go back and review your insurances, a few times now, I've actually had people go, well, what's this policy? Oh, well, I haven't owned that vehicle for 3 years, and they're continually paying for it. I think one was actually paying for his ex-wife's life insurance, and they had been split up for 6 years. So he was sort of like, So we were able to make lots of savings. So definitely keep checking where your situation changes to make sure that your financials change along with your situation.
Absolutely. Subscriptions is huge. Every time someone goes through, there's always one that they don't need anymore.
Yeah.
Yeah, definitely. All right, and next we're going to talk about gross profit margins. So a poor cause of cash flow here is them being too low. So a gross profit margin is what's left from sales after deducting your variable costs, so your stock for resale, your materials, your labor. That's what gets your gross profit. So you've got your sales, your direct costs, and then that's your gross profit margin here. And then you take away all your other expenses, which are generally your fixed costs, like your subscriptions, your rent, your power, and then you've got your net profit. So gross profit's up there. It's basically another way of saying your variable costs are too high. All right, so how can we increase our gross profit margin? There is a number of strategies that we can use, and it's dependent on the business that you do run. So, so for a service-based business like myself, my variable cost, so my cost of goods sold basically would be subcontractors, because that's variable. So I have people coming in and working for me on an ad hoc basis. And if that gets too high, I need to have a look at that. For someone else, like a bricks and mortar, you know, like a toy shop, it would be all this stock coming in there. For a hospo company, it would be all their food, their cost of goods sold, all their food, their milk, beverages, that type of stuff. So what can you do to reduce that? Well, capture and build time better for a service-based business. So you need to be a bit more productive. Reduce work and wastage. So in terms of, so it goes back to ordering stock, your inventory processes as well. So that comes back into it. So you can see this all sort of ties in. There's all these layers that sort of all work well together. It's talking to suppliers as well. So if you can get discounts for prompt payment, You know, what suppliers would work better for you in terms of, so the product might be the same, but the costs might be slightly different. So, you know, have a little look around. Freight costs as well can be huge as well. So that's something to look at as well. And yeah, just making sure you're not over ordering just with your invoicing processes as well.
And I think the key thing here is when you go and price up your goods, so let's say it's $100 sale price, and then it's going to cost you $50 to be able to make that $100. And then you've got your overheads, so let's say they're $30. So now suddenly this product that we're giving away is costing us $80 by the time we've paid for the goods to sell, and then our overheads to pay for the power and everything like that. And then, because we're such amazing people, we go and give our clients 10% discount. We're not actually making money anymore. So one of the key issues that affect our gross profit is when we actually give discounts on our sales, it's reducing our sales, increasing our gross profit. So therefore our product is no longer 50%, it's probably now 60, 70%, because we've given away some money at the top. So really, if you can, think about discounts as a very bad thing. If you don't take anything away from this session, what I would like you to take away is if you think about discounting, that Hayley will come and smack your hand. Discounting is bad for your business. Find another way to incentivize your product. Sorry, I just stole that one, Sarah.
No, that was a perfect example. Goes back to pricing your products and understanding your pricing, isn't it, as well?
Very much so.
Yeah, yeah, which is a whole another conversation almost, isn't it? Here we go. So there we go. How do we increase sales levels? You know, what can we do to incentivize? Can't say that word. Incentivize people to, you know, get your sales going. Now, if sales, I have to just say this, if sales are being too low and they're not supporting your overheads and other expenses in your business, it does come down to how viable the business is right now. So we do need to look at that as well. But if we give it a good go and look at increasing customer retention rates, for example, so have a look in-house first and then go out, and generating more leads, increasing transaction frequency, so that's also a good one, and increasing transaction value. All right, so these are all little things that you can do to try and help increase your sales levels. Running campaigns. So with Father's Day coming up, you know, we can run some marketing campaigns and try and get some sales going. Or when is it? Next week? Next week?
Yeah.
Yeah. Yeah. So there's all these little things that you can do. There's hundreds of ways to increase sales. These are just a few of them. So customer retention rates first. So look in your past, previous and current customers now, because they're likely to be buying from you again, and then generating more leads outside of that, and trying to increase transaction value. So if you're going to be selling, you know, obviously some, you know, at Whitcoulls, I was on Whitcoulls the other day buying a book, and they said, oh, because you spent over $30, you can have these pens that were $15 down to $5. You know, it's just increasing these little things that you can do, but we're not allowed to discount, are we?
No.
No, we're not discounting.
Because at the end of the day, discounting takes away your cash.
It does.
So if we're going to offer a 10% discount, and then let's say for round figures, because I'm making this up as we speak, so please forgive me. If we're going to say 10%, that's a $100 discount that we're just actually now giving our client. That's $100 less than what we've actually got. If we can actually say, hey, look, I'll do an extra hour for you, or I'm going to give you a free tap and washer, which costs us $20, then the client is still actually getting something. They still think that they're getting something better than what they had before, but we're not giving away our cash. So our cash flow is still flowing quite happily. Client is actually really happy, but it's not costing us anywhere near as much. So really think about how you can do this.
Providing value with that sale.
Yes.
Yeah. Yeah.
Would you like fries with that? Comes to mind.
Yeah. Yeah. All right. So with those 7 causes of poor cash flow, did anyone have any questions on that before I move ahead? Because I'm going to start talking about the cash flow forecasting and how it all sort of fits together, because I'm aware it's already 12:42. So we've only got a little bit more longer to go. So if anyone's got any questions, just pop it in the chat box below and Hayley can read them out. And then we might go forward. And I'm going to just sort of have a bit of a rant about why cash flow is pretty important, and taking charge is what you need to do as a business owner now. Is there any questions coming up?
No, I think they've actually been really communicative throughout. Look at me using big words today. Throughout the session.
Yeah,
so
great.
It has actually been really quite cool, the ideas that people are getting from you speaking, Sarah.
Perfect. All right. So without understanding where your businesses are right now, so things might be going quite well for you, right? And you might think, no, this is great, we're just going to plod along. But how do you prepare in case things get bad? So how do you set yourself up to give your business and your family the best chance to get through an emergency? And cash is the best way to do this. All right, so we as business owners have a responsibility to manage our cash flow to the best of our ability, to be operating your business right now as if nothing bad is going to be happening with no challenges. I think is actually taking a lot of risk, especially with what we know what's happening in the economic climate today. So if you do have a few big months, put some money away. Just stash some money away. The goal here, generally, especially for online businesses, is to tuck away 3 months of operating expenses. All right, so 3 months. On other businesses, I'd say that as well. But if you can't get 3 months, try and put away at least 1 month. All right, and that will give you the security net, like the security blanket you need in case something comes back. Okay, but again, this does come back to good bookkeeping, and why it's important to have a good bookkeeper, so that you know what 3 months of expenses look like, and so that you have got good financial data that you can trust to be able to make these calculations as well and figure out what your normal month of operating expenses look like. Okay, so that's why it's important to hold on to those cash for these costs. And it just gives you as a business owner time to make adjustments in your business.
And I think just going by what you've just said, Sarah, Ange just has asked, how do you take charge when a supplier is not being transparent? And I think exactly what you've just said, this is about your business, it's about your cash flow, it's about you understanding your financials and what your costs are every single month.
Yeah.
I think the key thing here is that the word is your. This is your business. You're the one that's impacted. If you can't get someone to work with you in a way that you can actually run your business, find someone who will. You know, that's the key thing. You are the important thing. We've got to do what's right for you, and if that supplier is not doing what's right for you, find a new supplier. Yeah,
work with the people you want to work with.
Yeah, you're the power player at the end of the day. Don't feel like you are having to work with this person or this company or whatever it is, because you're the power player.
Absolutely. Yeah, 100%. So moving, what you might be asking yourself right now as well is how much cash you want on hand at the moment in case things go downhill fast, and how you can give yourself the best chance to pull through that. Now, this is the delicate dance that us business owners do, right? So we want to keep money in the business as a security net. We also want to pay ourselves to build wealth, and we also want to have money available to invest back into the business to help it grow, to help the profit grow, and also like pay all the bills that you've got as well. So there is a balance of striking these needs, right? And just like life, there is no perfect formula and no perfect balance. A lot of it is being aware of the metrics in your business. So a lot of it is just looking at your numbers and paying attention and making judgment calls to the best of your ability, and a little bit of hoping for the best. All right, so there, yeah, so it is a dance in terms of how you're going to be managing all these different buckets that you need to pay for, and tax, of course, as well.
Yep.
So if you are operating right now on just your gut instinct and feeling right now, having a little more financial insight into your business is really important. And I think as entrepreneurs though, I think it is important that we do have strong instincts and we do trust our gut. I mean, that's what's got us where we are now to begin with. But we do need some data for this. We do need some information to know where the business is at financially. So, and it's about figuring out that balance and taking money out as well as keeping money in. All right, so, and this is where forecasting can get you prepared for the unknown, right? Okay, so we're going to be putting some numbers in a spreadsheet. It's one of the best things we can be doing right now, and it's one of the best ways to plan and run these numbers and what the worst case scenarios are in your business as well, and seeing what successes you can have. So it is about playing. It's about just doing your best. It doesn't have to be perfect. The more you do it, the more comfortable you will be at it. And it doesn't have to be complicated, all right? And it just gives you an understanding of what's happening. Okay, so should we go and have a look at it, shall we?
Sure. And while you're changing over, Sarah, it's interesting because I've just had a meeting with someone this morning who felt the business was really going downhill and it was horrible and everything else, but yet when we actually looked at the cold hard numbers and the data, they were actually up quite a bit on where they were last year. So
really?
COVID, I think, has given everyone that negative perception that everything's going bad. So cold hard figures actually will keep you on the right track.
Yeah, so that's interesting. So they had a feeling and a gut instinct that things weren't quite right, but then when they backed it up with the actual data, it was a complete turnaround.
Yep.
Yeah.
Yep.
Yeah.
So definitely look at your figures.
Yeah, absolutely. Now actually what I'm might have to do, if I put that here, how do I change screens? Sorry guys.
Just go new share. You just had it.
I know, but my camera's on this one. I'll be going like this. Oh, there. Oh yeah, new share, there we go. Cool, hi guys, over here. All right. So this is...
Not what we should be looking at.
Where are you? Can you see the template?
No, we're looking at your PowerPoint.
Oh no. Oh, I need to put share.
Sarah.
There.
Yep, that's what we want.
Okay, cool. Thanks, guys. All right. Okay, so this workbook here, now that the technical stuff is gone, this is the template that I'm going to share with you. So you can manage your cash and look ahead at the timing of cash with a simple little spreadsheet like that. So it's not scary at all. And you'll be able to, like Hayley just mentioned, be able to spot any shortfalls and trouble in paying specific expenses. So we'll just go through this. I'm going to give you a quick overview of it so you can just see how it works and where to start. But yeah, you want to be doing this maybe in the next week or so, basically, to get started so you know where you're at. So we're going to jump in, and what we're going to start with in the square here, that's your opening cash balance, okay? So if we start in March, so pretend that says maybe September. Oh, before I jump in, actually, this is a monthly forecast. And a lot of businesses suit the monthly forecast. You can go into a deeper level, a weekly forecast, require a little bit more work, but if you're more cash sensitive, a weekly forecast might be better. But we're just going to look at a monthly one today. So if I put in the ending balance of February, so before any other transactions come in, say we're going to do 10,000, you can see that it pre-populates this one. So this is going to be built upon and show you what the balance of your bank account is going to be out here. All right, and then we're going to predict what sales level we're going to make in March. Okay, so this is just at the beginning of the financial year. So I'm going to predict in this company, we're going to have 20,000 of sales. And you know what? That's going to be pretty consistent along here, except in May, going into autumn, winter, it's going to dip a bit because that's what happened last year. So you look at your figures from last year as well as predict what you want to happen as well. What you think is going to happen, sorry. Now here, we're just going to put in all your cash payments. All right, so it's all your steady payments that come out. Monthly is generally quite good because if I look at, say, rent for this one is $1,000 every month. So we're just going to drag that one out. All right, simples, right? And then with insurance, we'll talk about some insurance, and that's, you know, we're holding some stock. So we're going to put $500 here. And talking about stock, we're going to do 10,000. That's how much we're going to order in March, April, and May. See, so it's still predicting what your cash balance is going to look like. So it's brought in your income from March, April, and May, and it's just taking away these expenses. And then down here is your change in cash, okay? And then we've got some salaries to do, so I'm just going to bang that one in. And you know what? It got actually a lot busier here. We're thinking of hiring, so we're going to put a subcontractor in there, and we're actually going to hire someone here. So we're looking at hiring. That's going to work. All right, so how's that looking so far? That's looking pretty good. But we also have some debt. All right, so we're going to put in some loan repayments here. Quite a big loan repayment. Oopsies. Wrong one. 4,000. Track that one in, and then you just keep putting in all your expenses. And what I'm going to do is I'm going to have a bit of a play, and I'm going to say power. Now we know that's going to increase going into winter, so we're going to increase that maybe to 550. In June it would probably be, say, 600. And then marketing, because it's going to be Easter in April, we're probably looking at spending $1,000 in marketing here and another 1,000 in here, because, you know, it's dipped in sales here. So we're like, oh, okay, no, we need to increase sales again here. That could help. Or, all right. And then we are going to, got some cleaning, chuck that one in. That happens every month. And phone bill, quite a high phone bill. And then if I have a little play with it, you can see that we're overspending, right? We're overspending a little bit here compared to what we're earning. Okay, but because we've got the balance over here, we're still okay. You know, we still got some cash in our balance. But, you know, we haven't actually paid ourselves because this is for staff. We want to pay ourselves. And this is where you can play around with how much you can pay yourself in drawings, right? So you can say, well, I want to pay myself $2,000 a month for drawings. Is that going to, because that's how much I want to pay myself.
It doesn't
Can't
look
pay
very
myself
good.
that much. I can't, because I can't afford it. Okay, so remember, we're just in March here, so we've got some lean room to play around here, okay? So we can say, okay, I'm going to have to change this up a little bit. Why don't we not have the subcontractor in February? We can do without a subcontractor extra hand, and we are going to hire, we will hire in May, and because we're going to hire in May, me as a business owner is going to have more time to help work on the business, therefore increase sales. Right, so maybe we will increase sales. Maybe we can actually put a little bit of marketing in here and increase sales a little bit here. Maybe we will increase some sales here. And because we think that the May month isn't going to be as high as April, maybe we don't need to order so much stock. Maybe we can decrease stock ordering in April and maybe order 9,000 in. See, now that's what's telling me is we're positive here. We can afford this. We can actually make this work. But we've also got to remember if we're GST registered where those payments are going to come out too. So there's a few working wheels in motion here that we need to keep an eye on, because these loan repayments, they can't move. They're not going to be flexible, right? These telephone bills, well, is that high compared to what other people pay with, you know, say 3 staff? Maybe I could have a look at that. And in here, you know, power, we could have a look at power and marketing. Do we need to be spending that much on marketing? Are we getting a return on that investment? Maybe if we just spend 800, we might in fact find that we get the same results, but it's more targeted. And then obviously you could put in all your insurance in here. And because you know what your insurance are going to be, because you're going to be doing a cash flow, you're not going to be paying for anyone else's life insurance through your business. And you're going to be paying the right card, right? And then obviously any interest income will come up here. So it's a really good template to work out how much to pay yourself. So you might think, actually, we're completely overspending. I'm spending about, you know, an average of say 19K a month on my operating expenses. That's how much I'm going to need to save away in case something happens. So that's my monthly operating costs. So that doesn't sound right, does it? So what's happening here? What's wrong with your sales? How are you going to increase your sales to be able to start making a really good profit? Obviously, this is all just hearsay. It's just showing you what you need to look at and if it's viable, and how you're going to increase these sales to cover all of these costs here. Because some aren't going to change, like this one, your rent. You might decide you're going to go more online as well and push the online sales. But it's a really good, you know, focus on what's working and what's not.
And I think that's what it boils down to. This quite clearly shows there are financial problems in the business. It might be that things aren't priced correctly. It might be that, you know, we've got too many expenses at the end of the day. But what we shouldn't be looking at is going, the business can't afford to pay me, so therefore I just don't get paid. If you're going to work in your business, you need to be paid. And I did a calculation for someone a month or so ago, and their hourly rate was 71 cents an hour. So I challenge everyone to actually sit down and work out how many hours you're working in your business and what you're getting paid. Because if you're not getting paid less than minimum wage, that's illegal. So we've got to fix your cash flow and your business to make you get paid at least minimum wage.
Yeah. Hence why this wasn't changed, but we're looking at this and this. Yeah.
Yeah. And
so,
don't be one of those business owners that goes, oh, so for me to take $5,000 out at the end, I need $50,000 of sales, and plug in that number and then go, it's all good now. If there is no way you're actually going to do 50,000 of sales. So it's got to be realistic as well.
That's right. And that's a good lead into my next slide, actually. And just to finish off, you're going to have some instructions here in terms of how to use it. But when you do receive it, just update these dates here. And remember, it's going to be a moving document. So you're not going to do this and then say it's gospel. You're going to do this like monthly, hopefully anyway. And you can plug in your forecastings. So I just do a new share onto that one. Can you see my slides again now?
No.
Can you see them now?
Yes, we can.
I'm getting good at this.
You are.
Okay. So what we want is here, the goals are basically looking at your finances in a maybe slightly different way than what you were before. So you want to pick something that you want to start to do that's relevant in your business and make changes on how you're going to manage these things. Okay, so the goal here is to get some cash saved up in the business, to have that flexibility to react to whatever happens in the future. That's the goal here, isn't it? And to pay yourself, build your own wealth, invest in the business, and have some money saved up. And make sure you're paying those taxes too. Delicate dance again. Be intentional with the planning and what your business numbers are telling you. So when it's in front of you like that, it can be quite confronting, but it definitely makes, you know, you're in the driver's seat, you're in control here when you do it. And making cash flow part of the management of your business that you set time for. So if I just skip through to this page here, so what I wanted to talk to you about with the cash flow is having some plans. So I don't know if you've got a business plan, but that works in with a cash flow. And a cash flow management plan is where you're going to work out what you want to achieve in your business. So what Hayley said, I'm going to pay myself $5,000 and I'm going to make sales of 50,000, but they're not really smart goals, are they? Like, how are you going to do that? Is it relevant? Is it achievable? And is it smart, you know, specific enough? So in 12 months, maybe you want to pay yourself $5,000. Okay. 5 months, 6 months, 12 months. Okay, maybe you could do that. Well, what's your 90-day goals to get there? What actions are you going to take now to make that happen? Okay. So if you want to do a campaign for Easter or Father's Day or Christmas, a marketing campaign, put it down as one of your 12-month goals or your 90-day goals, and what income you want to achieve from that. So how you're going to boost those sales as well. And work those into your cash flow forecast.
That's brilliant.
So, sorry, so one of one of my clients' revenue goals was just to pay for their household's grocery budget every week. You know, so that was just, she just wanted to earn $350 a week to be able to just cover that and contribute to their household. Now she's earning a lot more. You know, she's achieved that. Okay, cool. What's her next revenue goal? Okay, and then, you know, there's got to be reason behind it. Like, you can't just say, I want to do 10K months. Why do you want to do 10K months? Is that because everyone's telling you to do 10K months? You know, you've got to have some sort of desire, some sort of, what's the word I'm looking for? You know, something to work towards that has some substance. So, do you want to say something, Hayley? You look like
I was just going to say we're running over time.
Okay.
And some people need to go. So feel free, if you've got to go. I will be in touch at the end of this, and we'll send out the link for you guys to actually come back and watch this. Sarah will be in touch and she'll contact you with the spreadsheet, and by all means get in touch with Sarah if you've got any problems or if the spreadsheet doesn't make sense. But my main thing, if you're going to do the spreadsheet and don't end up with FTI, failure to implement, definitely do the spreadsheet, and then actually if it doesn't give you a rosy picture, don't just close down that spreadsheet, save it, and then go and get some help. That's the big thing here, is once you know it, you can't not know it.
That's right. Yeah, so no matter how big or small you are, I encourage you to just have a go, right? It's just having a go, paying attention to your numbers. Data's pretty crucial right now. Definitely. And with that, I will show you what a little cash management plan will look like, which I can give you a copy of. And then basically it's about just finishing this up and taking 4 actions that I want you to take away with you. So it is important to have a plan, to be thinking ahead, giving yourself the best chance to be prepared, so you have a strategy to get through any economic downturn. Like, there's that cycle, isn't it? Every 8 years, there's some sort of recession or economic downturn. No one could predict COVID. No one knew it was going to happen. Now we're a bit wiser and that's sticking around for a while. So why not put a plan in place? You'll be better off for it. Setting up strong foundations for your business. So go over your systems, identify any poor cash flow practices that we went through earlier. Prepare yourself a cash flow forecast. Make it part of your business management that you set time for. So you are talking about money. You are, if you are facing cash flow challenges, it's important. They're not going to go away. And when you do have it in place, you will have a sense of peace and relief that does come with it. And the more you do it, the more comfortable you are and focused and in control that you'll feel. Because this is what it's all about, is taking control. And this is how you do it. And you need to take some actions. So yeah, that'll enable you to obviously predict the months when more cash is going out than coming in, like tax time. Okay, so it'll also, just as a side note too, it'll help you recognize if you're against your target, like where you are as well, in terms of what your targets are and what you're actually making as well. And following on from that, set some goals, set some cash flow goals, revenue goals, and have some purpose behind it though, instead of just picking out some numbers. Really have a little think about what you do want to achieve from your business, and then have someone independent and accountable to your plan. So for instance, I have set myself a massive goal of doing the motor tapu, a mountain bike. And I've got my own coach now, because I know I couldn't do it on my own. I know I couldn't go out and do all the training on my own, so I've got my own little coach he's not little, that I go to help me get through that. And I've got my own business coach as well to help me in my business too. So it's really important. I'm a big advocate of getting a mentor or a business coach, or someone that's really involved with you in your business to keep going. And then that is the end. So thank you for sticking around. 8 minutes passed. So that was quite good.
That's really cool. That's really cool. I just want to say thank you so much, Sarah, for actually joining us today. That's been really quite informative. Hands up all those that have actually taken away something of value today. Yay, that's awesome. Just as I always announce the next education session from this one. So I've just decided today, from actually looking at all the questions and things that have come up today, our next education session will be on the 25th of September and at 12 o'clock, and that is going to be on pricing. So I think if we can get the pricing right, we can get everything else right, and then you're going to have really great businesses. So if you're keen, keep an eye out for our registrations for our pricing webinar, and otherwise have a fantastic weekend. I've got to run out and buy presents for my husband's birthday because I still haven't done it, and it's tomorrow. So have a great weekend, and definitely we'll be in touch. If there is anything you need to know, you can always contact me. Sarah is at Little Black Books. You can check her out on Facebook, and if you've indicated you'd like to actually hear from her, she will actually be in touch, and you'll be added to her newsletter if that's what you wanted. But otherwise, thank you so much for your time. 10 minutes over. Guys. Got to work on that one.
Work on what?
Got to work on not being over time.
I know, I'm sorry. So much to get through. There was a lot of information there.
No, that's all good. Thank you very much, guys. Have a good day.
Bye.
Bye.